Well, hi everyone. You haven't been seeing a Vesto show for quite a while, which is because we were thinking about how to create the most value-adding show for you. And you see a new face with me, Sean Stapley. Sean, first of all, hey, welcome.
Carsten, thank you for having me. It's a pleasure to be here and looking forward to diving in.
And Sean is kind of like going to be my rant partner, for the upcoming 15 or 20 minutes or so, because we figured, hey, at the moment, there's so much going on in the crypto world. It is incredible, so we figured what is best for you is to give you a really super condensed overview once a week on what's happening in the crypto world and how does that affect us, from Vesto. And, Sean Stapley from Penrose Communications is really one of the super duper experts on the topic. I'm super happy to have him with me, not only for today, but also for the upcoming show. So, hey, Sean, you're going to be my partner in crime from now on, I guess, huh?
Looking forward to it.
Yeah,
Perfect.
so do I. Hey, Sean, talking about, what's happening in the crypto world right now. If I was to ask you right now, what were the big topics, say, over the past week or so that's really struck your attention and where you said, hey, that's something we ought to be considering and we ought to be discussing?
hmm Yeah, so that's the big question, right? What's going on? So I think if you were going to kind of break it down, there's three main areas over the last week that have hit the news. The first one being all the news around Celsius potentially going insolvent. A lot of them, the company having halted withdrawals for users. Discussions around who might be coming in to potentially bail them out. We've seen talks around kind of that idea that traditional finance companies are also looking at potentially making entrance into the space. But the second piece, I think, is more of a look into governmental adoption, right? So we've got a bit
Mhm.
more of how is this integrating with products that people use on a daily basis, as we'll discuss in a second, talking about Prime Trust looking at eyeing out crypto IRA and tokenized asset products. But I think also looking in into saying final pieces, regardless of what the price is, things have gone up, things have gone down, people are still building. We're still seeing big seed raises. Most recent one, I think, one to highlight was A16Z, the virtual studio out of California, just led a $7.5 million round for a Web3 authentication startup called
Right.
Dynamic. And so I think that's kind of the three areas that we can dive into today. Is really number one is from the perspective of what's going on in the space, a little bit of market turmoil, but also integration with government, and then wrap up with saying the builders are going to keep building.
Cool. Cool stories. Yeah, you talk about market turmoil. That is interesting at the moment. Obviously, we're talking crypto. Some people in our audience might be saying, "Oh, crypto. It's kind of like those apocalypse prophets. They were right. This is not going anywhere. This is all going to be a big Ponzi scheme or something like that. You see markets collapse. Which is interesting. On the one hand, we see sort of the one end of the market, which is the sort of classic, rather speculation driven cryptocurrency market. I mean, we're talking Bitcoin, we're talking Ether, we're talking all the other kind of coins which are out there, obviously pretty much in a bear market right now. But on the other hand, we see, despite some troubles in the stablecoin arena as well, we see yields for sort of the dominant, the traditional, the trustworthy kind of stable coins like USDC, for example. We see USDC yields going up again. How does that fit together, Sean? What's your take on that?
Right. So I mean, I think there's a couple pieces in there. Number one is to kind of set the stage for some of the listeners. The big news obviously is that Celsius, one of the major traditional, we'll call them traditional, because essentially the Celsius is you store your money with them, they pay you interest. Very simple banking model. They were offering much higher yields than traditional banks were able to do so.
Mm-hmm. Mm-hmm.
Banks, I'm still getting hit up saying, come for our high interest savings account, you'll earn 1%. Celsius, ballpark was offering on stable coins, so just US dollars, I think somewhere around 12% per annum. And likewise on Bitcoin holdings, 6%. So decent rates if you're thinking in terms of the traditional model. Um, Celsius then obviously ran into some issues because it turns out that they, by the looks of things, over leveraged themselves, potentially
Right.
made it done a little bit riskier in some timeline based
Mhm.
structures, and i.e. they've just locked up assets for a certain amount of time. So now they're having a problem with their liabilities.
Mm-hmm.
That then obviously ties back to, well, users' funds are locked up now. And also, what does that do for actually any of the yields that are locked in, right? So, so I think seeing that now translate into yields in the market now getting pulled a little bit back into where they potentially will shift. I think obviously we're waiting on a bunch of inflation numbers from this week, a whole bunch of CPIs coming out. But I think really for what that matters is that people are recognizing that there's going to have to be a necessity that base rates are going to rise, and that banks I think are going to have to follow. We'll see how traditional markets are going to take this, because I don't think we're just going to see some massive increase where banks now pay out 5% interest on your checking accounts. They're likely going to be saying, there might be an increase in this, but now we're going to be doing different structured products, right? The banks will always be trying to make money. So I think the interesting piece of this now is, how do we have potentially some of the traditional firms look at some of these more understandable models like a Celsius? Some competitors are like BlockFi or Nexo. How do TradFi firms look at this and say, what if we just acquired, right? Like, throwing it out there, what if you had something comes in and says, Celsius is in a bad position right now. They need access to liquidity. And right now they're just going to be in a sticky situation if they don't get a bailout. I wouldn't be surprised then if we don't see something is able to have, a bit of a leverage buyout, or someone's just coming in saying, we'll take everything. We'll take your loan book. We'll take your liabilities. We'll take it all. Here's a bunch of money, right? So I think that's a feasible one we might get to see now, because I think TradFi has recognized that the crypto space has increased their yields because they're giving more back to people. So that's the key piece, right? Is like, there's no legacy infrastructure. There's not thousands of employees that have to be taken care of. Crypto's obviously multitudes smaller, but it means that when you look at these lean models, more is being given back to people. And so I think that's where banks are now looking at and saying, okay, well, if we do see things shifting here, we might have to increase yield. And so obviously that's where, partners like Vesto can really fit in nicely in terms of institutions looking to onboard themselves into the space, and they just don't know how. So I think there's a few pieces in that. Is also that, as we're seeing, recession is, if not yet here, very imminent, depending on who you ask. Honestly, Kathy Wood obviously coming out saying we're here. But
I think, Citigroup recently said, there's chances of a global recession are really nearing 50%, so it's a 50-50 shot whether we're going to be living in a world like we've been used to it over the past couple of years, growth, or whether we'll be, going into a serious recession, most probably, because there's going to be a recession coupled with an inflation at the same time, which is, for, economics, one of the worst situations we could be thinking of.
Well, that's the thing, right? And I think that's where, for those that may remember 2008 and such, I think it was, all of a sudden things popped, right? And so, we've seen a bit of a slide in markets recently. Obviously, crypto is not doing great, but it's not just that. Everyone likes.
That's all markets. It's real estate, being predicted to sort of blow up again, So it's pretty much all markets right now, eh?
Well, that's the thing, right? Is I think it doesn't really change anything if you're investing for the long run. Is kind of the first part that I always do, right? It's like, we kind of have like two simple rules that I always say to people. I never give financial advice. I literally have a hat that says not financial advice. But I always say there's two things you just have to keep in mind if you're interested in looking into crypto. Number one is, don't invest with money that you need in the short term. And number two, never borrow money to invest in crypto. If you follow those two simple principles for most retail users, most average people, you'll be fine, right? Yeah. Don't use, I don't have money sitting in crypto that I need in the next year. And that's kind of a good principle to work on, because then, worst case scenario, as we've seen, crypto's crashed down from, I think we were 68K at the peak, something like that. Now we're sitting around just sub 20. If you've thrown a lot of money in that, you're now down to a third of where you were before.
Right.
It's tricky. And so the thing is that, this is my third bull and bear cycle, right? I've been interested in the space since about 2013. And so I've seen the rise, the fall, Bitcoin is dead. I've seen the rise, the fall, Bitcoin's dead again. This is the third one. And so really, I think they're coming down to saying, in times like this, the key piece I think a lot of people have to keep in mind is the two areas that we're putting a lot of interest in at Penrose are looking at, number one, blue chips. So just taking, if you have a diversified portfolio of something like Bitcoin, Ethereum, and maybe a few others that have stood the test of time. And number two, investing in infrastructure, right? And so, some similar discussion we've had with you guys at Vesto It's much more around, what needs to happen in order to bring more people into space, to bring
Right.
institutions in, to enable, for example, governments and pension funds to start looking more into this from an infrastructure perspective. And so, even going back to the other highlights that we talked about before here, when we see groups that are looking to say, like, what if you had a crypto IRA? What if you had a 401k? What if you had TFSA? Whichever jurisdiction you might be in, what if Bitcoin was
Which is
part of the
exactly what
investment?
Prime Trust is doing at the moment. Really raising significant capital, eyeing on crypto IRA, tokenized assets, and all that kind of stuff. Huh?
Exactly, and that's where I think we're shifting now from seeing what was the very crypto heavy companies, and
Mm-hmm.
now it's more of a discussion around what blockchain. And
Mm-hmm.
so that's been the key piece. And we've been at a few conferences over the last month, including Consensus down in Austin, Texas. And the best thing I can say for takeaways from that was that we ended up in a situation where we've got all the people here that are building. You're not here because you've got another coin you're trying to shill to 100x, as we've seen in past years. It's I'm building some base technology that everyone can use. And that, I think, is a difference. The crash and the bear market coming in right as conferences hit was, you know, if anything, it just flushes out a lot of the garbage.
Right,
Everything
right,
looks
right, right, right,
everyone
right.
looks everything looks great in a bull market. Everyone makes money, and then the tide comes out, and you see who's wearing shorts. So that's where now we can look a little bit more at things like prime trust. That's you're seeing traditional interest in the space translate into these innovations. So I think that's kind of where some of it's going to overlap.
And I really think, Sean, those are, first of all, thanks for your comments and valuable insights, but I think there's a couple of points we can really see from that. One is the point that you mentioned with regard to Prime Trust, raising more than $100 million on eyeing on a crypto IRA. So what are we doing? We are translating the old world, as one could say. We're translating that old world into a more secure, more efficient, crypto environment, which is, obviously a super duper chance for a multi-token protocol company such as Vesto, enabling such kinds of decentralized services. We're obviously happy to see some of the garbage and some of the false or inflated promises being washed out, as you were saying, Sean. And a second point that I really see and that I found interesting or find interesting, you mentioned Celsius a couple of times, and you said, hey, what's going to happen to Celsius and who's going to potentially jump in and bail them out and take over the business? And hey, who are we hearing about these days all over the place? Good old Goldman Sachs.
Yeah.
It's like, and you're looking at that. I was like, dude, it's like, am I suffering from amnesia or something like that? Or weren't you the guys who, until not too long ago, said, "Oh, that crypto is garbage. You can't trust that. We'll never go into that market," and all that. So all of a sudden, as you said, we see there's traditional players who say, "Hey, wait a second. Maybe there's something to that crypto thing. Maybe if we turn away from looking at Bitcoin and speculation and sort of the dark web and all that kind of stuff, we go into a regulated crypto market with KYC players in there, which is trustworthy and everything. And all of a sudden, this becomes a really, really interesting market for sort of the next level of financial services institutions. Because again, if you look at numbers, there was an interesting study by McKinsey about a year ago, which showed that 75% of all banks, are actually trading even below their book value. It shows markets don't have any trust in the business model of traditional banking and financial services anymore. And now what we see is, as you said, crypto, blockchain, with an eye on technology, with an eye on infrastructure, with an eye on efficiency and security. Hey, maybe this can take away a lot of the problems that we're having in the traditional financial world and create somewhat of a financial world 2.0, that is crypto based, that is decentralized, that is peer to peer, that is inclusive, and boom, here we are. Here we are with the typical USPs that we bring about for our Vesto platform.
Mhm. Well, I think great points all around. I think the only piece I'd add on to that is that I think there was a lot of discussion, particularly in the early days, of the idea that Bitcoin and other cryptocurrencies might be a solution that would solve wealth inequality. And I think
Mhm.
the message was a little bit twisted because where we're seeing now is that it's not that just having this idea that Bitcoin is going to save the world in this respect, right? Like the whole meme around Bitcoin fixes it. I think there's serious problems that have to be discussed across crypto. Things like the Bitcoin accumulation, for example, has a horrendous amount of inequality across the board, right? It's very
Mhm.
condensed with a small number of individuals and institutions. But the thing is that where we're now getting to is that although yes, there will be problems that have to be addressed, and I think there's very, very valid critiques of the space, that's not where I would focus on. The bonus of this and the positive in this is that we're now in a situation where there's a level playing field. And that's
Right.
the first time ever that we've seen this in history. Because you don't have the nepotism. You don't have this idea of someone has access to better solutions than I do, right? There will still be things like having accredited investor
Sure.
certifications. But if you look at a platform like Ethereum, regardless whether you are someone that has a lot of it or just a little, you're still able to have that same issuance rate in terms of actual new tokens, right? And I think that's the kind of model that we're curious about looking at is what's the impact if, for example, everyone's savings are being at really beating inflation and hopefully at a similar level in terms of across the board, meaning that people have more choice as to, are we looking to gain more risk, more reward? What's the sort of level that I'm comfortable? And I think that's where crypto is opening up new routes like that. As you said, look, with Prime Trust and the crypto IRA, very interesting avenues down there. But I think also for those that are, maybe wanting to hold their own crypto and hardware wallet, that's also a very different discussion where, they're curious about what needs to happen for people that want to hold their own crypto versus those that may be a little more hesitant and want to use a centralized platform, right? The problem with that, obviously, is as we've seen with Celsius, if you held money in there, all of a sudden that's locked up, and now you might not have access to this for a few months. So the whole thing comes back to the central idea of, not your keys, not your coins, being that if you don't
Exactly.
hold
Yeah.
the private keys holding the crypto, it's not yours. So all of this comes to say is I think that we're going to come to I think there will be a bit of consolidation in the market for
Mhm.
sure. I think we'll see things like,
I mean,
with
that's
some of the
that
news
that's
coming
like
in. Yeah.
every market that is in a shakedown phase. If you have
Yeah.
a shakeout, what do you see? You see consolidation. As you said, the garbage is being washed out. Some people are going to survive. Others won't. We see that it's not necessarily a matter of pre-shakeout capital, because I mean, you looked at Celsius, a couple of months ago, they were almost too strong to walk, and all of a sudden they are in a tough turmoil. But as you said, it's about the reliability and sustainability of business models at the end of the day.
Mm-hmm. Well, I think agreed entirely. Like the part now is that as we look to what comes next, I think that's where, even the discussions around like FTX looking at, the large exchange, as we're seeing Sam Bankman-Fried is basically propping up half the space with
Right.
Alameda extending lines of credit out to companies in trouble. But I also think, now's the time where you need a little bit of a bit of an awakening, I think, in the space that,
Yeah.
even
Well,
when you look at like the DeFi summer we had where people are like, there's 3,000% APY. None of that's sustainable. And not only that, the APY is paid out in your own token. So you're just causing inflation within a protocol. So like
yeah.
a lot of these crypto Ponzi scheme type things will have crash and burn very obviously. If you work backwards from, well, where is the actual yield coming from? You very quickly can see, what is real and what's not. And that's
Right.
why I think it comes back again to, I personally don't hold a huge amount of points, right? I have a very select portfolio of ones that I think will be here for the long run. I don't try and time markets. I don't try and do this, some Bitcoin, some ETH, and a few others that I think will last. But I think that's where it comes down to is that now we're getting into the part of what if someone just wants exposure to crypto as a whole? And that's where I think these products are going to be interesting because we might see in the coming years, the S&P of the crypto space is
Right.
something people will hopefully be able to invest in if you just believe in the idea, but you're not sure what. So I think that's where, the next little while is going to be an interesting aspect. We'll see kind of what happens with with other firms that are still holding crypto. MicroStrategy obviously doubling down and buying, I think, another $10 million. So hey, Michael Saylor's a genius or a madman, as people may think. So we'll see, what happens there. But I think it comes down to understanding first things first is let's get people educated, and from there we'll see what happens next.
And I think that's also what's going to happen in the consolidation phase. We're seeing FTX looking into purchasing a stake in BlockFi, for example. We're thinking we're watching again FTX looking into acquiring Robinhood and all those kinds of things. So there's a couple of interesting consolidations going on, which probably is going to make the crypto ecosystem of a whole bunch of fairly unknown small players turn them a little bit more into a I don't want to say world of conglomerates, but sort of at least a world of bigger, stronger players, as we've been seeing the financial world in the past. One thing, yeah, sorry, yeah.
No, go ahead. I think you had a question.
Oh, one thing that I found very interesting in the past couple of days, and I think it was yesterday or the day before or so, we saw a Web3 authentication startup, Dynamic from Israel, getting major funding, getting a 7.5 million seed round. And I thought that was interesting. What does that tell us for the future development of the market?
Well, I think the key piece there is people are still going to build infrastructure, right? If you put all the price movements aside, if you take out all of that noise, we've seen a huge amount of funds raised in the last year. We've seen them deploy into infrastructure projects. We've seen them deploy into custody. We've seen them deploy into identity, into privacy. I think these are the key areas that people are going to start building on.
So kind of everything we've been knowing from the old world of banking and finance, it's like you're not opening up a wallet anymore. I remember the founders of Dynamic saying, hey, for the next 5 years, we expect everyone to hold a crypto wallet, period. That's it, and there's not going to be any wallet holders like Mickey Mouse or Donald Duck or so anymore, but there's just going to be Sean Stapley and Carsten Barrett, fully KYC'd, fully authenticated. And this is why it's the basis for a trustworthy peer-to-peer relationship, huh?
Well, I think that's really it, right? Is that, there's going to be the one side where they'll have the world of you will be identified with these accounts, and it's very much a traditional banking model. And I think there's the other side where, as we saw with the recent, I think a few months ago now, with soul-bound tokens, and this idea of a verified identity, but not necessarily tied to one person, right? This idea of pseudonymous figure that can have its reputation verified, but not necessarily being tied back to one person. So like Sean Stapley, the individual, may exist as, and I have my own accounts with a bank, with brokerages, with crypto, whatever, but there may be a separate line in the sand where then you could have a pseudonymous digital identity, which isn't tied to you in the real world, but you can then attest to your activities online because that entity itself has a reputation. I think that's the other piece that will be interesting in years to come. We're seeing that already.
And the advantage of that is going to be data security and privacy improvements, or what's the big advantage of that approach to you, Sean?
Well, I think the thing with that is it opens up a whole new world as more data is going online. I think it's important for people to know what of their data is going to be out there, and also to potentially have the opportunity to, one, become compensated for it if they'd like, or number two, remain private in case they'd like as well. And I think we'll see where those two ends of the spectrum really fall. Some people will probably be right smack in the middle. They're okay with some information being out, but they want some to be private. Some may not care at all. It says, you can have all my data, I just want to be compensated for this. And others may want to be fully private. So I think, Dynamic and other firms in the space that are approaching this are going to have to say, we're going to need different tiers and structures to understand what individuals want and to be able to provide those sorts of services.
Well, Sean, hey, great, great insights. And, quite honestly, I could be continuing to discuss, everything that was happening, with you for hours. But hey, as we promised early on, we want to give our audience a brief little rundown on what was happening in the crypto sphere over the past couple of days or the past week. So Sean, hey, thanks a bunch for an interesting discussion. It was great. Very much enjoyed it. And yeah, ladies and gentlemen, I hope you enjoyed that new format of our Vesto show. as well. Now we're looking forward to providing you with another round of sort of stupid questions by Carsten and wonderful insights by Sean, in the next week coming up. And Sean, until then, first of all, have a good couple of days, good week, and let's keep our eyes on interesting developments in the crypto market. I especially like your last comment where you said it's all about infrastructure. So it's all about Vesto. It's all about what we're doing. And that gives us a good feeling about the business model we're following on. Sean, thanks so much. And looking forward to seeing you again next week.
It was a pleasure, Carson. See you next week.